there, this is forexbrokers.net, and we continue our video analysis coming to complement the articles into this trading academy. And this time I will discuss Japanese candlestick techniques and Japanese candlestick patterns, which are really popular among retail traders, especially since online trading increased in popularity in the last years. A candlestick is formed out of a upper shadow like this vertical line that you see here, or a lower shadow, and a real body. A real body's length gives you the strength of the candlestick. For instance, take a look here at this daily candlestick on the euro and the US dollar. We see a very long and very strong real body, a very small lower shadow, and a somehow bigger upper shadow. All these elements, the real body, the upper shadow, and the lower shadow, they help traders identify patterns on this on any market, actually, not only on the currency market. And Japanese candlestick techniques increased in popularity at the end of the 90s, when traders in the Western world saw that reversal patterns using Japanese candlesticks take far less time than classic patterns, like imagine a head and shoulders or the reversal, or a rising or a falling wedge, and so on. They take a lot of time for the price to reverse. Here, as you've seen in the article part of this trading academy, normally a Japanese reversal patterns take 2 candlesticks or 3 candlesticks as maximum, and sometimes when it comes to the doji candle, it takes only 1 candlestick. Speaking of the doji candle, a doji candlestick has little or no body, real body, and upper shadow and lower shadow. This looks like a doji candle. This looks like a doji candlesticks. All these candlesticks here. But careful with the interpretation, because on the daily chart, especially on brokers that show the Sunday candlestick or the trading activity during Sundays, so on those charts you will see many doji candlesticks like these ones here. So you gotta avoid interpreting doji candlesticks when looking at a daily chart and using a broker that offers the Sunday candlestick. And therefore, for instance, let's go on the 4-hour chart and try to see a relevant doji candle. This is a doji candlestick on the 4-hour chart, for instance. You see that it doesn't have similar open and closing prices as they are supposed to. That's correct. But that's very difficult to achieve in the FX market, because especially these days that brokers use ECN, which is Electronic Communication Network, or straight-through processing, and they route their orders through various liquidity providers, and therefore the quotation improved. Nowadays we see on the euro and the US dollar, let's go here, we see a 5 quote, 109608, 109603, and it makes it very difficult to have the same opening and closing price to interpret doji candlesticks. So you gotta be flexible enough to interpret candlesticks, and especially doji candlesticks. The MetaTrader offers various types of charts. We already discussed them here in this trading academy, but just as a reminder, a bar chart, for instance, like this, or a line chart, but candlestick charts show the activity during the period, and the rules set by the Japanese by interpreting this upper shadow, the lower shadow, and the real body. These rules help traders around the world identifying reversal patterns more easily and staying closer to the price. In this article, you will see bullish and bearish engulfings. You will find the piercing pattern, not the hammer pattern, because the hammer will be treated in the separate article. And we will discuss the setups and the power of the risk-reward ratios that can be built with these Japanese candlesticks in the next video. Thank you, and let's move on. Bye bye.